Yeah. So here we have a portfolio and why I chose to invest in these tankers. So I invested 33% in tankers. That's almost all my cash. I have 5% left. And I invested most in STNG. That's Scorpio. And DSSI, second most. Scorpio Tankers is here, STNG, and DSSI is Diamond S Shipping. I invested then also in TNP and LPG. LPG is the only LPG ship that company that I have. I included one of them. This is oil tankers, not really LPG. And oil tankers also includes product tankers. That's diesel and gasoline tankers. But it does not really include LPG tankers because that's gas. That's a different business. And I'm not. I didn't even study this, but I did include it because I've been finding this coverage from Mins Meyer. You have to pay for it, but he reviews all kind of ships, shipping companies, and I got it from his list. And yeah, but all the others are all tankers. So it's only about 10% that is in LPG tankers of my total investment. Um, but first of all, of course, Kelly allocation, super important. How much do I invest in this industry? I had 40% cash, but that is of no importance. The question is, what is the risk reward of this investment? And yeah, I think if you estimate modestly, you can say like, yeah, the total industry has a forex potential. Actually, some companies 10x, but let's keep it modest. And let's say 4x or 5x. There's an upwards potential. Was a downwards potential? Well, you could say minus 50 also, but I mean, cut in half. It's been cut in half. Some here have a long record since 2002. That's the longest track record I find. And if you look at what these companies did, TMP here, and I also found a track record of FRO. Um, yeah, let me make this a bit smaller. See the 10x here in 2002. That's the previous bubble or boom from 2003 till 2008. And for example, this Tsakos Energy went up from $2 a share to $20 a share. That's a 10x. Since then, it's back at $2 a share. Since 2008. So that's 12 years down. When you go from 20 to 2, what's the downwards potential? If in the meantime revenues have gone up or at least stayed the same, and book value has continued to go up, and we're now at a book value of what's the market cap here? 250 million, and the book value is 1.4 billion. That's crazy, huh? That's a book value of 20, market value of 20% of the book value. And the book value is the value of the tankers they have, and the tankers, I mean, are they correctly valued in the books? Yeah, very likely, because if you have high shipping rates, as we've seen the past year, then the value of the ships goes up too. And so these book values are likely correct, in contrast to airlines or cruise ships these days. The book value is not correct because you can't sell a plane or a cruise ship. Probably you have to sell it for pennies on the dollar today. So the value it is in the books is not correct. It's overvalued, overstated. But here the value of those ships is likely understated. So you're at 20% book value. You can't keep on being cut by half. It's just physically impossible because now the earnings are exploding. Like 250. If you look at this company, this is earnings from actually 2019 and the last quarter of 2019. If you look at earnings for 2020, you will see that actually compared to the market cap, the earnings, and that's profits, that's not revenues, or higher than the market cap of the company. So you have PEs of 2 or 1. So you can't continue to be cut in half. It's not possible. So what's the downward potential? Well, it's not minus 50. Usually you have to say, yes, you can be easily cut by half. But here you can't say that. So you have to say like, okay, let's say minus 30. Let's say that we can go for this one from 2.6 to 1.5. But that's absolutely like the bottom probably. Actually, we already saw that here. 1.5, 1.7. But and then you have to estimate odds. So what's the probability that you do another minus 30%? Is that a high probability or a low probability? And I think it's fair to say it's a low probability, simply because the earnings have exploded. Here you see the shipping rates since 1975. So your shipping rates go up here in the end of the 80s. Sorry, end of the 70s. Then in the 80s they go down, but in the middle of 80s they go up again, and actually quite long, from 85 till 90s. 92 they go up, and this is a big cycle. But then from 92 they go down and sideways till 2000. So 10 years basically bad rates. In 2000 you have a short peak that comes back again, but actually it's the start of a long-term bull market, because after that it continues to go up. Basically it starts in 2000 and it's still till 2008 that actually rates go up. And since 2008 we went actually basically down a lot, and okay, a short peak up in 2015, but then down again. And if this is not counted for inflation, if you count for inflation, which all these long-term charts don't do, and if they do it, they have the inflation incorrect at 1 or 2%. That is truly incorrect. If you discount this for real inflation, which is 5.8%, you will see that actually this price, this shipping rate, is a lot lower than this shipping rate, or this shipping rate even. Like this shipping rate looks a little bit higher than here, but corrected for inflation, this is actually a lower shipping rate than here. And this shipping rate is, you could say it's higher than here, but actually corrected for inflation was 85. This is a lot lower. So you see that shipping rates over time go down, simply because of competition. It's just a simple commodity. And like any commodity, it goes down in price over time, which is good for the economy and good for us. The cheaper shipping rates become over time, the better. But of course, it always causes bulls and bear markets, booms and busts, and in the commodity world, in the long term, it's a terrible investment. But in the short term, that if you catch a commodity boom, you can make lots of money. I think it's the same here. But the nice thing is that it is not, as you can see, correlated to the commodity boom. Yes, it can be correlated, but also cannot be correlated. Like, for example, in 85, shipping rates went up a lot from till 1990. And that's very good, because that was a commodity bear market. If you invested here in oil in this period, or in agricultural commodities, or in metals, or in you would have lost tons of money. But if you would invest it in ships, the oil tankers, you would have made very good money here. This is the same that I think is going to happen now, because, well, studying this chart here, you can see that if you look at the pattern here, what's driving these shipping rates? This study found that there are different cycles in shipping rates. You have short-term cycles that every couple of years, medium-term and then you have the long-term cycles. or every 5 years or so, and 5 to 10 years. And if you overlap these together, you get basically the result, which is the result of all cycles, underlying driving cycles. Is the end result is the, for example, monthly average of shipping rates, which you see here, and well, we are indeed very low, and we can certainly have an upward swing here for 5 years or so. Going back to the sheet here, I was explaining the downward potential and what are the chances. Yeah, I mean, you can go down, but the chance is not very high. And if you plot these numbers, you see that the expected outcome, and that's simply this times this plus this times this, is the 2x. With these kind of upwards potentials and probabilities and downward potential and probabilities, the expected outcome, and that's your edge, is 2x. And if you want to know the Kelly allocation, it's a simple but genius formula, only discovered 50 years ago. Edge over odds. If you do that, you get the ideal allocation that you should invest if you want optimal returns, and that's 67%. You do 2x over the upwards potential of 4x, and this is what you get. And that's what Kelly recommends. But of course, as an investor, these are estimates. We could be wrong in our probability estimation, and also this gives the highest possible optimal returns, but it will be very volatile. That's a given. And like you invest almost 70% of your portfolio in this investment. Well, if it gets cut by 30%, you just lost about 20% of your portfolio. So that's a very volatile experience. And the problem is that if you overinvest, if you have something wrong in these numbers, and let's say the expected outcome is a little bit lower than what you estimate, then actually you will not have the optimal returns, and you will have less than optimal returns, and you will also have an even higher volatility. So that's certainly not what you want to do. That's why you do usually half Kelly. Just because if you do half Kelly, and indeed you're correct in your estimation, and this was indeed the correct allocation, but you still do only half Kelly, you will have 75% of the optimal returns, but you only will have half the volatility, which is a great deal. So that's why you usually do half Kelly, and then you can increase or decrease based on how certain are you of the probabilities. And I did a little bit more than half Kelly because, yes, I think this is a very modest and fair estimation. I think I'm quite correct here in these numbers, and therefore I do a little bit more than half Kelly. And so that gives me that I should allocate 40%, which is exactly the cash that I have on hand to invest. So that's why I decided to invest all my cash in it. Then the question is in which companies, and I use different metrics here. For example, Landveer and Michael C on my YouTube have been trying to convince me of oil tankers and shared also what they invest in. And so I plot that out. Okay, they invest in these, Landveer, and Michael C invest in that. Also found a good YouTube channel on borrowed time, also investing in oil tankers, making great case. And he invests in these 5 companies. So then I just score that, like, the more people that I admire invest in it, the more I want to invest in it myself. So if you have 3 yeses, that's a 5. But if nobody invests in it, that's a 0. And I do other metrics also. I look at the track record. I look at the revenue growth. I look at Minzmeyer, who has an in-depth study and is an expert in the field. But I don't know his track record, so of course it's also not golden. And certain things I score from 1 to 10 when I value it higher. Like this is 1 to 5, so you can only make 5 points. The stock, any stock, But track record, you can make 10 coins because 10 points because that's more important. Huh? What did they do in the past? There are only two companies that have a track record to go back to before the previous bull cycle, where they have proven to do a 10x. It's very important because that's the point here. Huh? So if you achieve to do 10x, you get 10 points. However, if you have no track record, well, it depends a bit. Like if you look back at the past 5 years or so, most oil shipping companies have gone down a lot in value. So if you succeeded not to go down in value, that's a good performance. So this one, the last 3 years did not go down in value. Okay, you get a 7. This one was cut in half since 2014. The share price. Okay, that's average returns. Like that's what the shipping industry did. So okay, you get a 5 in 10. Huh? This one, however, is cut by 10 since 2006. Yeah, these are the what also typical performance, but well, it's just bad. Of course, you get a 4, and the worst ones. This one was cut by half in 2005. He had a 0. Why? Huh? That's wrong. I made a mistake here. Ah, yeah, because this is from before the boom. Huh? So this was during the boom. Huh? And if you look at EURN, which is a very popular stock in the oil tanker industry, it's a Belgian company. But I mean, that's just really bad track record of the share price. But wait, I don't have it here. Yeah, so you can't see. This is the euro shares, not the US dollar shares, because they don't quote on the New York Stock Exchange only the past 5 years, so you can't see the history there. That's why it only started here in 2014, the share price. But and it was 2014 $5. Now it's $10. But you look at the total history, and we can find that here. This is since 2005, 20 euros per share. Today is 10 euros. But 2005 was during the boom that lasted till 2008. Huh? So another 3 years of boom. And what did the stock price do? Nothing, or very little. Huh? There is no 10x here that happened for Euronav in the previous boom. To my knowledge, I can only start in 2005. Maybe in 2002 it was valued a lot lower and there was a 10x, but I don't have this information. And maybe also probably why it's not shown is because the stock was not traded publicly. So maybe it's like the private shareholders that made that 10x, but then they go public and all the gains are gone already. And so in the previous cycle, the public investors, the public did not do a 10x, but they did do a cut by 2 the last bear market. Actually, that's a good performance because most oil tankers are cut by 10, but it's not so valuable because I'm investing in this to do 10x. Huh? And actually, Euronav is not likely to do that. They also are known to pay out almost all their earnings as dividends. So the 80% they pay out as dividends of their profits. So they are not an expanding company. You can't expand if you pay out all your profits. You're not really investing big then. So therefore, I gave this a 0 in track record because if I can study your track record from the previous boom and you didn't even do a 1x, it's ridiculous. I'm not investing in this industry to have such returns during a boom. So you get 0 on this level. Even though all the people that I like invest in this and recommend this, I look at the track record, it's very bad. Look at revenue growth also. You have two companies here that really perform very poorly. They have declining revenues. That's also very bad. You don't want to invest in a company that's declining in the revenues over time. It's a shrinking company. Euronav is part of that. Since 2002, and that goes back further in history, they make a little bit more revenues, but if you correct for inflation, which is 6% per year, actually they've been going down in the revenues by 5% per year. And the same for ENSW, also declining revenues. Let's look at the name of that company. I'm sorry for the noise. Little girls can be very loud. International Seaways, also very bad track record in revenues. The revenues go back till 2013. So also a zero for that one. But the revenue growth, some did very well. DHT, sorry, this does not earn a revenue growth of, this is bad. I shouldn't, yeah, 5 here and 5 here, because they have 59% revenue growth and 34, but this one is wrong. Only 9% revenue growth should be a 2 or a 3, huh? And then, yeah, Minsmeyer, is he long these shares? That's this study here. Um, he's sharing if he's bullish or not, and if he is invested or not. Also gives a rating. For the risk estimate of the company, an A till BC, and then the management of the company, A till BC, D, and then whether he's bullish and whether he's long. The only thing that interests me, of course, is whether he's long. That's the most important metric. Is he investing himself? And he also shared that actually his favorite company is DSSI, Diamond Shipping. He has invested with his personal portfolio the most in that. And therefore I gave this only an 8. Yeah, because I also include, but actually I should give that a 9 or a 10, because that's his favorite company. But he only gives it the BB, but I should still give it a 10 because I know that. But I only gave it an 8 because BB, if it's AA, then it gets a 10. If he judges that, yes, he's invested and he gives it an A on risk and on management, it gives it a 10. But yeah, personal decisions weigh the most. So actually, that's why I give this a 10. But yeah, interesting. The lowest is points are for those that I don't even include, those that don't have, like, yeah, those that have C's. I don't want to see them, but actually 2 of my top picks have a C on management, a C plus and a C plus. And that's for Scorpio on management. He gives it only a C plus, and TNP on management he also gives it Tsakos only at a C plus. But okay, I did keep them. Why? Well, this one has a 10x track record. Of course, can't dump that. Is very rare. And this one, Scorpio, I really like the interviews from him, and I also noticed that many of the people that are in this invest in this really like Scorpio. And Scorpio is known to be a leveraged play. They have lots of leverage, but what that exactly means, I don't know. But Scorpio, the CEO, though they don't have a track record, yeah, they have a bad one since 2010, cut by 5. But the manager or the CEO of Scorpio had some controversy because he had been buying long calls on his company because he really believed it would go up. So he's betting a lot on the company, but also he sold his previous company successfully at the top of 2008. So personally has made lots of money in this industry. So I think he's a very good market timer. Listen to his interviews as a Scorpio manager, and he really knows what he's talking about. And there's the more leverage. Like if we get a boom market, this company will likely go up the most. So I really like that story, and that's why well, actually, why it ended up being the biggest allocation is simply because of the points that it earned. I gave it a 7 here because, well, this Minsmeyer is also invested in it, but it's only a B and a C, so it's certainly not a 10. And he didn't say that this is his favorite company. So it gets a 7. If you add all these numbers, you get this ranking. And then I put on an enlargement. So the top one gets times 3, whereas the bottom one, what is this? 12, 12. No, the bottom one gets it gets cut in half. So the 12 points that the bottom one gets cut in half to 6 points, but the 21 points that the top one gets multiplied by 3. And in the middle it's only times 1. So that way I get basically, otherwise I would invest almost the same in the top, double as much as in the bottom. But in my opinion, the bottom has so many worse conditions than the top one that I don't want to invest only double in the best performer and half in the worst performer. No. So that's why I put on this enlargement, and I make that bottom players get a lot less points than top players, and then that's also how I allocate. So in this one, I will allocate 10 times more than in this one. That's the end result. And that's also what I have as targets then. This is what I want to achieve as targets. Hafnia I was planning to invest in, but I invested too much in the other ones here, and so I dropped that. I will not be investing in this one. This is also the only one that's actually not available on the New York Stock Exchange, or not in US dollars. You have to buy this one on the Norwegian exchange. All the others you can buy with most brokers. So, but because of course of that, it's hard to find the data also by Hafnia. But yeah, I heard good things about it. Minsmeyer is also invested in it. Landveer from YouTube channel also. So yeah, I mean, but yeah, there are some other actually companies there also on the Norwegian exchange and the Danish exchange, oil tankers, but I left those behind. That's it, guys. Thanks so much for watching, and I wish you good luck selecting your favorite oil tankers, and I hope my information has been helpful for you too.